Hey friends, welcome back to the channel. My name is Sanji, and in this video I'm going to show you a few websites that I like to use when it comes to my personal finance and investing. Here we go. So the first one we'll look at is paycalculator.com.au. Now this is quite a popular website. I think people have probably seen here and there. In its old form, it used to look like this, where you just have your salary and you can tick, hex and whatnot, and you can generally see what your take-home pay would be. Now it's recently been updated by its creator, and it looks like this, where it's got a way more set of tools and way more sort of options to try and test and finesse and see what actually happens to your personal finances. And that's what I really like. So let me quickly take you through it. The first thing is you need to put in your annual salary, and you clarify if that includes your superannuation and if you have HEX debt. So say you're earning $90,000 a year with super, and that also includes you have HEX debt. Then instantly when you scroll down, you can see very quickly this is what your take-home pay should be, $2,200 odd. Now, if that's not what your take-home pay is currently and those numbers generally line up, it could be because you've forgotten to take into account something that's occurring in terms of your payroll division for pre-tax amounts that are going out. So maybe, I don't know, maybe you're putting in more into superannuation, or maybe even as part of payroll, you're also getting your private health insurance paid out, obviously post-tax, but maybe that's also getting paid out as well. That could explain why there's a bit of a discrepancy between what this number here on this website is saying and what's actually hitting your bank account. But generally, it's a pretty good approximation of what should be turning up there. And you can also see how much you're theoretically paying in tax and how much you're paying in or how much you're getting in terms of superannuation. So very handy in that sense. Now, the other thing you can do with this is you can play around with how much you want to put into your salary sacrificing in terms of superannuation. Because if you scroll right down to the bottom, you see this section here around superannuation band, and are you within your concessional cap? So I'll put a link somewhere up above where you can go and read more about it, but that's generally what most people say is try and put in as much as you can into superannuation while staying under the concessional cap. So here you can see you've got a bit of room. You're only putting in $7,000 a year into superannuation. This is all estimates, obviously, when the limit is $25,000. So you can scroll back up, go into this superannuation tab, and you can click on this salary sacrifice amount, and you can play around with the number. So let's say you want to put in an extra $100 a week into super. Scroll down and you can see, okay, now I'm putting in $13,000 into super, still under the concessional cap. What if I took that number up to say $350? You can instantly see here, it says you're exceeding the concessional cap. And you scroll down, you can see the graph has changed, but it's $26,000 against the $25,000 in terms of your concessional cap. So you sort of know, well, if you're going to put in additional amounts into your super as part of salary sacrificing, that's sort of the range you want to play within. Use this as a bit of a tool to estimate various settings, but always speak to your financial advisor and to your tax accountant, especially when it comes to anything around tax, to get a bit of an idea of if you're on the right track with some of these things. Now, the next website I'd like to tell you about is Camel, and it's this idea around price tracking websites for sites like Amazon. Now, I got introduced to this website back in 2015, I think, and it was just around simply being able to track the price of things on Amazon, because you may have not known that Amazon dynamically changes the prices on various products on its site every day, usually every week. It might fluctuate a little bit up and down. Now, often we don't notice it because when we go to buy something on Amazon, we usually just buy it on the day, or maybe there's a couple of days difference. But generally, we usually buy it within a very quick time. But if there's something you're interested in buying, but you're not in a rush to buy, a price tracking website is very handy to use. So let's quickly jump across to somewhere on Amazon. Now I'm using the amazon.com.au website. And let's say I'm interested in buying this Philips Hue Play LED bar light. So all I'd do is I'd select it from here, or I'd select the address bar, copy the address, go into Camel, paste the website in, hit search, and then Camel will come up with the website where it shows you how the price has been tracking over time. So this is the historical price that this particular product has had. So you can see it vary between being a little bit under $100 all the way up to $130 at one point, probably just after COVID really hit. So this is very handy to know and be able to track. So if you wanted to buy this, but you wanted to maybe buy it at a slightly lower price, what you can do is you put in your email address here, You can say you want the Amazon price, and when it comes to the drops too, you can put in a specific price you're interested in, or you can just set in, say you want it to be notified when it goes below 10% what it currently is. So it's very handy, and I've set this up, and it's a very unintrusive process. It'll send you a confirmation email, and then nothing will happen until it actually hits that price, and you'll get an email from Camel saying, hey, the price of this thing that you were tracking has actually dropped below your target price. Very handy. I've used this for a few things, and it's actually to the point where you'll forget about it, and then one day it suddenly pops up saying, hey, did you know the price has gone below? And then it also gives you a little graph as well. So it's a very handy tool to use if you want to buy things on Amazon and you're not in a rush and you just want to get an idea of where it's being priced. Now, the next website I'd like to tell you about is the legendary compound interest calculator website. Guarantee you have seen the outputs of this website many a times, and it looks like this. It's this nice graph where people will say on Instagram or TikTok or Twitter, and they'll say, if you invest $10,000 and you invest an extra $1,000 every year and the market grows at 7%, this is what will happen. And it's this idea of compound growth. And it's actually set up more for compound interest calculators. So if you have a bank account and you put say $10,000 in there and you earn 3% or 7% interest, whatever it is, you probably can't get 7%, but you get the idea. How does it compound on top of each other over time? This is what the graph would look like. Now, what most people have started doing is, because it's the same idea in terms of compound growth, a lot of people have started using graphs like this or calculators like this to get an idea on what happens for a share market investment that you might have that grows over time, where say you put in $10,000 initially and then you invest $1,000 a month into the share market for the next 20 years and it's growing at say 7% a year on average. This is what it will look like at the end of those 20 years. You will have $530,000, and sort of half of that would have come from the $1,000 a year that you invest in, and the other half would have come from the total interest, which is actually just gains from the share market in the form of capital gains and income that you would have reinvested back in. So remember, all of this is assuming you're reinvesting all your gains. You've got dividend reinvestment plans activated and you're not selling anything. You're just constantly buying into the share market. Now, this is handy to use in that way. Obviously, this graph is not how the share market actually works. It's very squiggly, but the idea is over a long period of time, it kind of averages out to looking like this. So it's handy if you want to test out various scenarios. So let's say you want to put in $2,000 a month into the share market. This is what would happen. In 20 years, you'd have $1 million in your portfolio. If you started with $10,000, you put $2,000 a month in and you kept going for 20 years, assuming 7% growth, you'll have $1 million portfolio. That's the general idea a lot of people use this for. Now, it's also handy if you want to test out alternative strategies. Maybe you delay when you start investing, or you change the amount that you want to invest per month, per year, whatever it is. It's all there and available. So I just thought I'd point this out. This is something that you can all get access to. And the key thing is it actually comes from the moneysmart.gov.au website, which is an Australian government website set up to help people manage their finances and learn about finances. And while I'm here, let me just call out, the MoneySmart website is an incredibly useful website, great resource when it comes to managing your personal finances. It covers all sorts of topics, all the way from shares to superannuation, credit checks, what to look for when you're looking to engage a financial advisor. It's all there, and it's all written, I guess, from the point of view of the government, so they're trying to be as neutral as possible. Very handy website. If I were to make a course on personal finance, I would probably just copy all the topics in here and just make videos about all these topics. Like, it's that comprehensive. So if you get a chance, it's worth taking time out of your day every once in a while and reading the articles on here just to get that background information on a lot of topics. Now, the next set of websites I'd like to show you is the tools and calculators from Vanguard's website. This is a really interesting set of tools that are out there. I'll concentrate on the asset class tool and the interactive index tool. The asset class tool basically shows you all the different asset classes you can invest in as an Australian investor, and it shows you the different returns that you would have seen over different calendar years over time. And you can sort of see the Australian shares. You had that big drop down in the GFC around 2008, and then it's sort of grown since then. Again, with international shares, something similar, US shares, property, Australian property. This is not actual residential property. This is more commercial property, but still it's a bit of a proxy for how does a property index done. Bonds, international bonds, and cash, as well as a bit of a reference. So this is a great way of getting a feel for what kind of returns you should expect in these different asset classes. Now, if you go back to the tools and you click on interactive index chart, this is a very handy tool set to look at. Now, when you click on the actual link, you start with this website here, where it shows you a bit of a trend of all these different asset classes. So again, Australian shares, international shares, US shares, bonds. So this is assuming, I believe this is assuming if you had invested $10,000 into all of these classes individually, what would it now be worth in 2020? So you invested $10,000 in 1970, now what would it be worth in 2020? And it gives you a bit of a return average over this period of time. So it's a very handy to look at in that. Now, the real value though of this is if you clicked on manage portfolios, and now you can actually simulate a few different portfolio settings. So all you have to do is you go up to here and you say create your own, and you can put in, let's say you assume you put in a investment where you had $5,000 in shares and $5,000 in US shares. So you had a 50-50 split between Australia and the US. Or let's say you wanted to do a bit of a split, be a bit more diversified across both Australia and the US, but also in terms of bonds and shares. So you had $2,500 in Australian shares, $2,500 in US shares, so that's your $5,000 in equities, let's say. And then you have $2,500 in Australian bonds and $2,500 in international bonds. Let's have a look at what would happen there. And so you have these two portfolios. I'll just turn them on, and let me turn off some of the other ones that I had, like bonds, US shares, and Australian shares by themselves. And you can see here, investment profile 1, which is where you had half in Australian shares, half in US shares, you'd get this kind of trend where it kind of breaks out after, around 2012-ish. And then it's sort of, you can see the shares really kind of gained momentum. It's probably driven by the US, but gained a lot of momentum since then. Whereas the 50-50, half in Australian shares, half in US shares, but then also half of that was also in different bonds, Australian and US bonds, you can kind of see how that's a lot more conservative, but it's grown anyway. But then if you compared that with, say, cash, and you had just had money in cash, you can see how cash pretty much didn't go anywhere. Like it kind of went up, and it's almost started flatlining now. And then similarly, if you wanted to look at what would happen if it was just Australian shares, that's what would be the situation. So this is interesting. If you had just money in Australian shares, you would have actually underperformed having even half of that money in the US shares, or even half of that in shares and in bonds. So it's an interesting kind of setting to test it out. Now this is since 1970, so you can then pull this back and say, well, look, I was only really investing since in 2010. And you can then see slightly different in terms of the returns, but again, very handy to see how it would actually vary depending on when you started. So I find this is actually kind of useful. I don't use this a lot. It's kind of what I use to show people when they want to understand how different asset classes go, and if you want to test out various portfolio settings. I'm sure there are other websites out there that do it, but I have a general preference towards Vanguard products, so that's probably why I use this. But it's a very handy to do in terms of different scenario testing. Now the last one I like to show was the legendary Yahoo Finance website. Now I do have an account with CommSec, and I know they have charting facilities in there, but sometimes I just want to pull up a quick trend on Yahoo Finance and have a look. And this is where I find it's very useful. You go to Yahoo Finance, you type in a trend and you get the chart. Then if you want to do a quick comparison, you just click on the comparison. Let's say we've got VAS here. Let's put in the old comparison of A200, two ETFs that basically do the same thing. One's narrower, one's more broader. And you can pull up a trend and it shows you very quickly what the trend comparison is against these two ETFs. And you can add more, and you can go over various time periods, and it's just a very handy tool set. Very small thing to show you, but I just think Yahoo Finance is actually a very useful tool set just to compare things very quickly instead of having to go into your broker and pull up these charts there. Let me know if you have any other websites that you like using in the comment section below that you find very useful when it comes to personal finance and investing. I find these are pretty useful just to keep me tracking or track websites in terms of pricing on Amazon, or be able to do those quick compound interest calculations all on there. Just great resources to have. So I'll see you in the next video. Bye for now.